What's up, people? Let's see.
Hey Michael, how you
Hey,
doing?
what's up? Good.
Yeah, uh, my name is Bryce, old Dre friend. You remember? I text you on Telegram.
Oh yeah. I barely checked Telegram. I'll reply after this.
No problem. How you doing, sir?
Good,
It's been
good,
a
good.
while. Yes,
Yep.
Mike.
Work is good, chill. Right.
Yeah,
Let's see. All right, good morning, everybody. Today, I think I started the YouTube live. Today is Wednesday, October 11th. As usual, doing analysis for US 30, gold and EU. So I'm personally in a gold sell, but I'll go over that, the reason why. But starting off in the daily bias for US 30, bullish, daily bias for gold, still bearish. However, you see gold formed this live buy SAR. So my bias will not shift until gold closes above here. Also EU, my daily bias as of yesterday switched to bullish since we had a daily closure above that SAR, by SAR. Daily bias for the dollar bearish since we had a daily closing below the SAR. So here I took a sell on gold at 1873.7. The reason for that, so I've mentioned time and again that SAR stands for stop and reverse. And for me, my bias never changes until I get a daily closure. So gold, knowing that SAR stands for stop and reverse, it was a risky trade given how bullish gold was. But if your bias is bearish and then whatever instrument you're trading forms a bullish SAR, once price gets to that bullish SAR, you can take a sell there. So for example, here, my sell on gold is all the way up here, 1873. Let me see my MT4. So my sell is at 1873.87. So my sell is somewhere around here. My TP is literally at this point right here. And actually right now I should set break even. But right now, looking at the other instruments, I don't see any entry for US 30. So I'm bullish for US 30. I don't see any break and continuation. So even looking at the 1 hour or 4 hour entries, I don't see any entries right now on the 1 hour or 4 hour. So that's why I'd have to come down to the 15-minute and 30-minute. So nothing on the 15-minute for US 30. Nothing on the 30-minute for US 30. Unless price comes back down for US 30, I don't see any immediate entry for me. So this double SAR right here is an entry zone I can see possibly for US 30. But for me, price has to come down here and then I find an entry down here and ride US 30 back up. But right now, nothing for me. Gold, so there is, as much as the bias is for sell, so there's some sell entries here for gold. That one entry, so there's this double SAR right here. So this is a test. This is test and rejection. So if this 30-minute candle closes, that's a sell on gold. However, if you're not already in the sell like me from the top, I would be cautious taking a sell down here. And I think I'm about to hit TP for this trade. So if this 30-minute trade closes, this is the trade right here, right? This is a zone double SAR. So this would be a test and rejection. Test and rejection sell. So possible test and rejection for right now. Right there. So if price closes all the way down here, remember the key thing, you want your stop loss to be above the SARs you're trading. So which is why for me, I would not take this trade on impulse. I would wait for a retracement back up to take the sell. However, if price comes back up here again for gold, the other reason I took a sell on gold, if you look at the hourly time frame, we have these are the last SARs So if gold closes above here, I automatically know at the end of the day, my bias tomorrow will be bullish. So these are the last sell zones you have for that sell. But if gold comes back above here and breaks 1873, that's it for the sells. So if you're not already in this, if you hadn't taken this sell like me previously earlier in the morning for gold, I wouldn't recommend re-entering this one. So anyway, that's a 30-minute. That's test rejection, 15-minute time frame. You have the same thing. So 15-minute is actually running, because if I look at the 15-minute, wait, give me a second. So if I extend, so those, okay, yeah, 15-minute, this is what I'm looking for. 15-minute was a 1, 2, 3, 4, a quadruple sell SAR zone. So you had a test on the 15-minute. So this right here up here is a 15-minute. So sometimes you have to extend the charts to the left in order to see some of these SARs. So the 15-minute, that's a test and that's a rejection. So this is your test candle. So you want to see what candle gives you the test. So there was 2 entries. So earlier on in the morning, this first one was a test and rejection. So this was a first initial sell on US 30, I'm sorry, on gold right there. You see what I've gotten faked out. So this is the importance, when I say you want your stop loss or you want your entry next to your SARs. So you can see for anybody who had taken like this trade, it was a valid test and rejection of that 15-minute entry. They would have started off in profit. And actually, I think this one this would have ended up at break even, my bad, because before that retracement to the upside came, you would have achieved a 1:1 and you'd have been at break even. But still, this is not a trade I would have entered, because I always ask myself, where is my entry relative to the SARs I'm trading? So what other entry did gold give you? Tests, the same zone, 15-minute zone, and rejection. That was a sell entry right there on gold. This one would have been tricky as well, because the entry relative to the SARs is like, the SARs are ideally 100% of your stop loss. So that is a red flag. So which is why for me, when I entered the sell on gold, I used the hourly time frame. And I knew I used the hourly in conjunction with the daily. When I saw gold come and retrace or test this by SAR, that's when I automatically, and also I saw that based off of the hourly time frame, we were testing the last hourly sell SAR. It wasn't a double sell SAR, because the difference between the top one and the bottom one is like 20 pips. So I normally say for you to have a double SAR for gold and FX pairs, the distance between the top and the bottom SAR should be no more than 10 pips. So for this one, I just used the daily. So knowing that SAR stands for stop and reverse, or support and resistance, use the daily. And then when I looked at the hourly, I saw this was the last sell SAR. It was a single SAR. And then that's when I entered the gold sell at the very top. So right now, this, yes, is a valid sell. However, this one would be at break even. So this one entered in the beginning of the live session, 1871. Yeah, so I wouldn't even be chasing this, because anybody who entered this trade would still be at break even. So I don't see, other than that 30-minute trade for you guys, unless gold retraces back up, I don't see anything else on the 15-minute time frame. The only sell I see for gold is that 30-minute time frame, test and rejection, this one right here. But for that one, I would wait for price to come back up here. So keep in mind, we have FOMC later on in the day. I don't care too much about the FOMC that doesn't have the minutes release. So for this one, I really don't care about this one. The one I care about is the one that's normally at 2 p.m., the meeting minutes. And then you normally have the other one, the 2:30 p.m. that has the FOMC press conference. That is the FOMC event that I normally care about. But this one I, based off of past, the way it's moved in the past, most of the times it's a choppy session. So you normally have like a spike up, spike back down, spike up, and then you just have markets keep consolidating. But not to say that this news event for today, even though it doesn't have the conference, wouldn't give you like a huge move. So I'm just saying, personally, it's all a game of probabilities. So today might be that one of those days that it actually moves heavy during that meeting minutes. So I'm at, let me put my gold sell. I'm up like 4K on this gold sell. But again, right, this is not an official trade. This is just, so which is, I normally tell you guys, you don't have to, so long as you learn the strategies, you don't have to be waiting for me to take the trade. This thing is not okay, moves up to break even. So for this trade, if it hits, I'll be up 6K. I took a loss yesterday on gold. This was just trading by myself. I'd taken a sell on the 15-minute time frame. It was at 1 p.m. or something. Yeah, I took, I think, this sell down here on gold. I took this, yeah, it was this sell because it was this break continuation, and I was still biased for sell on gold. So I took this loss on gold. So the entry was down here, same thing. So entry was down here, but the SARs were like 110% of my stop loss. So I waited for gold to retrace back up. And then I actually entered, I think, at the top of this candle. So unfortunately, I was in and out of profit, but Asia session took me out with a loss. And then I just waited for this other trade. So other than that, for this gold trade on the 30, so the 30-minute, wait, when does the 30-minute validate? Not yet. EU, bullish for EU. I don't see the issue with FX pairs. Some of these SARs are so close together. I don't see anything on the 30-minute for EU. 15 minutes. So there is a buy on the 15-minute time frame for EU right here. We just validated. But since I'm in a gold sell, I'm not going to take this. But this is a valid trade. Let me see if I want to take it even with like a small risk. Let me just mark it up first. So this right here, you have a double SAR here. And the best thing also with FX pairs, they can give you that nice tight SAR zone. So this one, this is a break and continuation. And you can see, so this is a 25 pip stop, 50 pip TP. Let me see, depending on how my gold trade goes. Let's see. So this is, give me 1 second. 610. So I'll call this a triple. Same, different. No, if I call it a triple, it won't be a break and continuation. Let me see what I want to do if I want to take this. If it comes back down, but this is a break and continuation by, so it's not possible. It's outright break and continuation because you had this candle break, this candle continue. Your entry would have been there, 25 pips. So if it comes back down, I'll re-enter this as a possible official trade, but we'll see. If EU comes back down, I'll look to buy EU. Yeah. So gold, as gold comes back up again, this is the 30-minute time frame. Yeah, so depending on where this 30-minute candle closes in. Also, if you use the markups indicators, we do have a 4-hour bearish. This is right. For me, this was like 5 confluences. We had a 4-hour bearish high, like where I entered that gold sell. We also have a weekly bearish high. And remember, the weekly bearish zone rarely comes on. So 1876, we have a weekly bearish high. So that is a heavy selling area for gold. For me, I still anticipate gold to come back down to 1800. This war thing, it's not as big as the Russia-Ukraine. Well, I don't want to like down talk it, of course, was terrible in any sense. But the reason I'm really not considering it as a big thing is we really don't have any superpower. Neither Palestine nor Israel is a superpower. By superpower, I'm talking about like the G6 or G7 countries. Now, we do know that Israel is majorly backed by the US. So unless like the US formally or directly gets involved in the war, that's the only time I can see gold spiking all the way up. But so long as the US stays in the background of the war, and any other countries out there that may finance Palestine stay in the background of the war, I think this spike in gold is just short term. And I do see them possibly using this weekly bearish high to bring gold back down. So what may happen during FOMC, you might see a spike up. So stop out people who have sell orders around this zone, maybe trend up, and then we have CPI tomorrow, right? During CPI, we might move back down heavily. So that's something I do see happening with gold tomorrow. So this EU trade, if this also, if this gets to like 1:1, which is like a 25 pip zone, I'm not going to, because keep in mind, you don't want to enter a trade that's, if you had entered it from the beginning, your stop loss would be at break even. So I need to make sure that once, if this trade gets here, gets 25 pips into profit without EU coming back down to tap us in, I will not enter that trade, because you'll ideally be, so for example, if this EU comes up 25 pips and comes back all the way down and you enter it, for somebody who entered it, when the trade validated, they would be taken out at break even, and for you, you'd just be chasing the trade. So that's my markup just right there. This is just to let me know if EU hits here before coming back down to tap me in for the buy, I'm done with this trade. I'll just wait for another trade to come in. So if this trade comes back down, I'll enter like a buy on EU. But personally, right, again, I'm in a sell on gold from the top. Sell on gold from the top. My stop loss is at break even. And we'll see how this plays out. I wish US 30 gave something, but I don't have anything for US 30. If any of you have any questions, today might be a good day to ask. I don't see myself staying on the live session for long today. Let's see what we got here. So I want to.
What is the stop loss for gold?
My stop loss for gold is at break even. So, so my stop loss is at the one I'm in right now. See, my charts are frozen. I have like 10 accounts that I normally run. As much as I try and buy a bigger computer. Let me see on my phone, but my stop loss is at break even. Let me tell you what it is. It is at 1872.87. That's where the stop is. So this is the trade I entered it off of the daily buy SAR since, right, until that daily closes above there, right? You normally expect. So this is the trade that I personally entered. I entered it 1870. What did I say? 1873.9, somewhere there. Yeah, so that's a trade I entered. So my stop, so here again, so for somebody like me who's in such a position, right? Remember, wicks always tell you a story. So here, what I see, we have a bunch of buyers here. So we have some buyers, and this must be market or institutions that are keeping price above this zone, because we definitely have a lot of selling. And, I normally expect this during FOMC. So here, we have a bunch of buyers, but if I turn on the markups indicator, we don't have any major order block here. If I turn on the zones indicator, you'll literally see we're in red zones. As much as we have buyers sitting here, they really don't have any OB or order block to push price up. So this is where manipulation comes in. And right, you don't need an order block to push price up. But when I use the zones and markups indicators, I normally want to see an order block next to where buyers are, next to where sellers are. So for example, if I turn off those zones, here we have a 4-hour bearish high, 4-hour bearish low. We have a weekly bearish high, which rarely comes up. So if I turned on the zones indicators, I want to see heavy sellers sitting here. So here you can see within that weekly bearish high, which is why I told you guys, they might spike price all the way back up. So you can see between the weekly bearish high order block is 1870. Let me turn that off. Is 1876. If I turn on the zones indicator, within this whole zone that has sellers, we do have a specific zone in here where more sellers are concentrated. So 1876, the end of where those sellers are concentrated is 1878. So I would say between 1878 and 1876, that is a heavy institutional selling area for gold. US 30 is coming back down. Let's see. I want US 30 to come back down in here. But even for this entry, you would need, this is on the 15-minute time frame. So remember, my entries are always based off of 2 candle closures. So 2 consecutive candle closures. So even though US 30 gets down here on the 15-minute time frame, I want a 15-minute candle to test and close above this zone. And then I want the next candle after that to also close above that zone. So that would give us a test and rejection entry. But anyway, this is a buy zone. I do see possibly this may be a possible setup on FOMC for FOMC. So you guys can mark up 33,767. Look at how price acts on that area. So I'll be watching it also. And for me, US 30, 50 pips stop loss, 100 pips TP. And I like when I get entries for US 30. For SAR entries, but this is the area I'll be looking at even after the live session. On the 30-minute, I don't see anything. So unfortunately, yesterday, I know we were waiting for a buy on the live session and price kept pumping up, but we didn't get any retracement. For the 30-minute, this zone that we were looking to trade US 30 yesterday, 33,697. That is also a buy zone on US 30. But if you can see here, and this will be reflected on also on the hourly time frame, this might be a double top on US 30 right here. But anyway, for me, I just follow my daily bias. This is, this right here is what tells me whether to look for buys, whether to look for sells. So I don't really care about let me not say don't really care about, but when I start looking for patterns that go against my daily bias, sometimes I get I don't want to say afraid, but afraid, or my psychology is affected. So let's say my daily bias is buy for US 30, and then I start seeing, oh, there is a double top. And double tops normally show bearish volume. So I can get like a buy entry based off of my SARs, and then my mentality will be like, oh, but you have a double top on the hourly, and then I'll be like, okay, let me just stay out of the trade. And guess what happens when I stay out of the trade? When I stay out of the trade, price goes into TP for the SAR I would have taken. So you just have to find what gives you the direction for your main trading, for your trading day, and everything else, just filter it out. So personally, I may get stopped out at break even for this gold trade I was at on the daily. I know I was up 4K, but it is what it is. For me, it's either break even, stop loss, or TP. That's just how I trade. In future, I may increase my risk to reward to maybe something like 1:3, and then I may start taking partials along the way, or find a way to even be taking partials with a 1:2. But I'm pretty sure right now EU is pushing up. So if it gets to this zone again, I'm done with this trade, because at this zone, I don't know if any of you took it. So remember, you don't always have to take the reason. And I know this came up during the live session. The reason I did not take EU is because I was in a gold sell. And normally I know both of them go together. So I don't really like being in opposite trades for instruments that go together. So that's just my own personal preference. But I did say that this trade did validate, right? Break continuation. So again, you don't have to wait for me to say, right, I'm buying or I'm selling. But just understand the entries, and then if you see the entry and it makes sense to you, like for example, if I wasn't in that gold trade, I would have taken the EU trade. So because my mentality here was I can take gold and then it ends up in a win, and then I take EU, ends up in a loss, or vice versa, and then I would be break even for the day. So even though right now I'm like 0.5 pips away, not even 0.5, I'm like 10 pips away from my break even being hit on gold. Either way, right? If EU goes into profit, I'll still be at break even just for sticking to that gold trade. But what I'm hoping here is that before price gets to 1.06404, we get a retracement for EU, and then I'll be looking to buy EU as well. So here's that 30-minute. We have 28 seconds. So this 30-minute entry, so the same idea for EU, right? So gold here, when this 30-minute candle closes, this is a valid, so it moves from a possible test and rejection, and it moves to a test and rejection. The reason for that, you had this first candle test this 30-minute double SAR. Then you had the next 30-minute candle also close below that zone. So this is your test candle, this is your rejection candle. Now ask yourself, if you were to enter this trade right there where it is, where is your entry? Where's your SARs relative to your entry? Your SARs are about 60% of your stop loss. Are you willing to take that risk? If you're willing to take that risk, sure, go ahead and enter. The trade is valid. But for somebody like me, you can either enter on impulse or enter because the trade is valid, or somebody like me will be like, you know what, I'll wait for price to come around this zone, and then I'll drop down to the 1 minute time frame or 5 minute time frame and look for an SAR, a live SAR on there. Or I can choose, since for me personally, I risk like 0.75% per trade, I can choose, instead of hopping in with the full 0.75, I will hop in with 0.375. And then if price goes against me, I will enter with the remaining 0.375 if price goes against me. So it's just a decision for you guys. For me, I'm already, like, where this entry on gold is, my original entry is somewhere around here. So I'm not really going to enter this. But again, keep in mind, I'm already in a gold sell. Like, my gold sell is somewhere above here, and it's at break even. My gold sell entry is somewhere above, right? 1872.87, right? So my gold sell is somewhere above. Well, I know the prices are different. So just make a decision. If I wasn't on the gold, if I wasn't on in that gold sell, I would have taken this one. If that helps anybody, I would have taken this one. So for me, for this trade, I'm already risking the trade. I'm already risking 1.5% because I'm risking 3K and I'm on a 200K account. I would have taken this trade as an official trade. But right, remember, the only ones I count as official trades are the ones I say I'm taking on the live session. So I'm already personally in that gold sell, but at a different entry. So just make that decision. If you want to be safe, enter with half risk and save the rest. Either way, if you enter with half risk, even though price does not retrace back up, for you to scale in, you'll still be up. Like, so if instead of risking 0.75, you're risking 0.375, and the trade goes into full TP, you'll be up 0.75 at the end of the day. So it's all a numbers game, but just whatever you do, make sure you're managing risk properly. So that is the entry right there. And we will see how that goes. So US 30, there was nothing there. So 15-minute. Yeah. I haven't traded US 30 in a minute. I miss trading the Dow. That is my favorite instrument of all time. So keep in mind, for anyone who does decide to jump in this, the logic is the same, right? Once you achieve, and you can see we do have sellers there, but you can see this wicks right there. This wicks are the ones where, it's just some manipulation. So once your trade gets to 30 pips in profit, so it's 30 pips stop loss, 60 pips TP. So if this trade gets here in this zone, go ahead and set break even. What else was I looking at? Okay. I hear multitasking. And you guys can ask any questions. So remember, today I don't even have any of this. Is just the possibly only trade we have. So I don't have anything else for today beyond this gold trade. So if this gold trade gets to like the 1:1, I think I'll be done for the day. But keep in mind, for me, my trade is already at break even because I'd entered this sell much earlier. And
So I want to know what is the right lot size for a 100 account?
So for me, I don't deal with, well, let me put it this way. I deal with percentages, right? So so for me, like automatically, I know every trade. If you ask me what lots, unless I go ahead and look at my computer, but I know for gold, if my stop loss is 30 pips and I'm risking 0.75 per trade, my lot size is going to be 5 lots. 5 lots. Let me here. There's this tool, which is what I use, or which is what most of us use in here. And again, I'm not affiliated with it. And this was actually brought to us by, I see Dean is in the chat. Sub Dean, been a while. It's called InvestSoft. So it's just like Trade Manager. You put, it's only like $100 like forever. So you just buy it one time on one instance. So this is what I use. So for me here, like for example, let me see if I can get a better picture of it. Yeah, I think this is the interface right here. So for me here, I just put in what do I want to risk. Like, so for right now, since this trade I'm in with a 1.5% risk, here the cash amount, and I'm using a 200K account, I put 3,000. And then this is not, well, let me put this. Let me just take a screenshot of my chart. Yeah, so I stopped dealing in, what is it called? I stopped dealing in lot sizes and monetary values like a while back. Let's see, let me stop share this. Let me share my MT4. Yeah, Dean, I'll come to Colombia, man. Share screen. Okay, so this right here is my MT4. I just took a screenshot of it. So this right here is my MT4. So here I'm risking 1.5% of my account. Actually, wait, this is, okay, wait, this is a different account. Okay, I changed accounts. I'm sorry. Anyway, you know what? I'm actually going heavy on this account. This is not the 200K account. Anyway, it is what it is. There's a big balance in the account. So this one, so I thought it was a 200K account, but it's not. So for this one, since I thought it was a 200K account, so you need to know how much you want to risk. So for me, every trade, I risk $750 for a 200K account. So 750, no, I'm sorry. I risk $1,500 on a 200K account because 1,500 is 0.75% of a 200K account. And then my trades, I do 1:2. But when I've achieved a 1:1 risk to reward, I go ahead and set break even. So that means if I'm risking 1,500 and my trade hits, and my trade goes to straight to TP, I'll make 3K. Now, I recommend risking for any account size, which is why I don't do lot sizes. For any account size, don't risk anything more than 1.5% per trade, unless you're very, very sure of the trade. So you can see this trade I'm in, it's up like, what is it? 1,400. Oh, I didn't mean to do that. I thought that was highlighting. So it's up 1,400. I was up 4K when this trade was here. But for me, this trade right now is risk-free. So for this tool, what it does, you just put in whatever amount you want to risk for the trade right here. And then it automatically calculates the lot sizes for you. And then you just also have to tell it what is your stop loss for that trade and what is your TP for that trade. So you just put in the stop loss and TP values, and then you tell it, I want to risk 500 for this trade, and then you put 500 in here, and then it will automatically risk or adjust the lot sizes for you. So normally here on a 200K account, this one I normally put 1,500. So I normally put 1,500 because that's 0.75%. And I think when I put 1,500, the lot sizing, for example, on gold would go down to 5%. And then when I'm ready to enter the trade, I either hit buy or sell depending on the direction. So yeah, so whatever it is for 100K, whether it's 100K, whether it's 200, I don't recommend risking anything more than zero. If you're still learning, don't risk anything more than 0.5%. If you've learned enough and are willing to up the risk a little bit, and you have a trade that you're like 90% sure this trade is going to go in that direction, sure, you can go to 0.75 and then work your way upwards. So for me, like where I started, for the longest time, I was risking only 0.5% per trade. But nowadays, right, I've scaled up to 0.75. So in another 2 months, I want to be risking like 1% per trade. Sometimes occasionally I'll go like 1.5% per trade, which is the max even for me. But that I would have to have like a lot of confluences for me to do that. So one of the confluences that made me go to 1.5% for this trade that I'm in right now is this weekly bearish high that we have right here. So that's another major thing that made me go up for that trade. Yeah, but just do percentages. If you want to deal with lot sizes, if you're still dealing with lot sizes, I would say don't do for 400K account, don't do anything more than one lot per trade. And that is assuming you're probably doing like a 50 pip stop loss on gold. So even looking back for me, don't do anything more than one lot for 100K account. But make sure if you're doing that one lot, make sure your stop loss does not go above 50 pips for gold.
Thanks, sir.
I just want gold to flush, man. Any other questions? Yeah, I don't know. I think I was trading the wrong account today, man. Like the other day, when was it? On Monday. And if you do decide to make those changes, make sure that before you hit buy or sell, you check the cash amount you're risking, because one mistake I did was on Monday. On Friday, I was up like 12K on NFP after NFP. So I upped my risk to 6,000 per trade. That is 3% per trade, because I was already up for the day, like 8% or something. But on Monday, I forgot to change that cash amount value I just showed you. And guess what? I entered this sell on gold, and then instead of losing the 1,500 I would normally lose, I lost 6K. And I really, that actually took a bunch of my profits from last week. So make sure every time, if you're going to use that tool, make sure every time before you hit buy or sell, you check and make sure that, oh, hey, am I risking what I would normally risk for this trade? So gold is dropping. So even though this trade hits, again, I'm not going to count it. The only trades I count as official trades. So for me, keep in mind, I really don't care about, showing that I'm making 10% per month. I make personally trading by myself, I make way more than that, or not way more than, but my return based off of what we record here is different. Like for example, today, if this gold trade goes ahead and hits full TP, I'm not going to record it as like a win here. So here for me, I'm recording this as we didn't take any official trade. The reason for that is, I was already in a gold sell, so I really don't want to add on to that. But which is why it's key for you guys to learn the strategies by yourself. And then the issue will always come, or an issue after you learn the strategy. One issue I can see even for myself, and I'm still dealing with that, is if a trade validates far away from your SARs, right? Remember, you have those 3 decisions to make. You can either go ahead and jump in but the trade has to be valid. You can either go ahead and jump in. You can either use half the risk. You can either wait for a retracement. So for somebody like me who normally chooses to opt or opts for waiting for a retracement, I would be missing out on this trade, but then I would be fine with it because I know not every trade goes, not every trade would go this way. On the other hand, let's assume this trade, instead of going straight into profit, reversed to the upside. Now, for somebody like me who likes waiting, I would be actually happy, right? Because I know that the trade is coming to fill me in. But for the person who chose to jump in and the trade reversed, now they would be in drawdown. Okay. Now, in the third instance, the person who did not know whether to wait, did not know whether to jump in, but chose to play it safe and chose to say, okay, instead of risking 0.75, I'll risk 0.375. Guess what? Right now, they would be in profit. And if the trade went into drawdown, they wouldn't be in as much drawdown as they would have been if they choose to use like a 0.75. So if in doubt, always use, so long as the trade is valid and so long as the SARs are not like 70%. So in this instance, the SARs were like 50% of your stop loss. That is fine. The red flag is if these SARs are like 70% of your stop loss and above. So for the person who had chosen to use like 0.375 for this trade, as much as they didn't use 0.75, if this trade wins, they're up 0.75, and that is $1,500 on a 200K account. But anyway, for anybody who entered this trade when it validated, we are almost at an area where you should be setting break even because we are almost 30 pips in profit. So check that. And for me, already I'm at break even from the original sell that I'd taken. And also check US 30, right? So this area, check it for FOMC 33,768. What I do see happening here, you see these instruments are dropping. So they might drop, and then what time is it? Expect liquidity to die down around maybe 1 p.m. or 12 p.m. before that FOMC event. And then price will consolidate around this range. So this trade is already at a 1:1. So go ahead and set break even if you did enter that. So you are at risk free. So if you want to secure some profit for that trade, feel free to secure. For me, I'm one of those people, break even, TP, stop loss. And it doesn't mean that, that's the way to trade. Even for me, right? I'm still learning as much as this is my third year in trading. When it comes to risk management, right? I'm still trying to learn where I need to take partials, etc. So, but if you want to take partials, I think for me, where I might take partials is if price gets this zone right here, this low right here, I might secure some like 1868, because here we have price rejecting from this zone. So and for me, the reason I'm securing is that I'd already taken like a $1,500 loss yesterday or earlier on today. So like right now I'm up 3K. So I really I want to cover the loss that I took previously, but let's say I'd started off the day with no losses. I'll just let this trade ride either to full TP or break even. So let me know if you guys have any last questions, but keep an eye out on US 30 and keep an eye out on when gold gets to 1868. What might happen? It's possible they might come this way and then go all the way back up during FOMC, or later on tomorrow, bring gold all the way back down. So I don't like trading when, on some of these days because you have some manipulation, but just, know what you want to do for this trade for you guys. For me, I'll be looking at this US 30 during FOMC later on. Any last questions? Perfect. Bryce, I will check your Telegram. I rarely use Telegram, but I'll check your Telegram message.
Okay.
All right. See you guys. Be safe.
See you.
All right.
Good day. Thank you.